All right. So today we are going to talk about operating segments, which is IND AS 108. Now, what's the relevance of this standard, right? So when you look at any company financial statement or any company financial performance, there are primary statements which a company needs to prepare, which is your balance sheet, your profit and loss account, your cash flow, and your statement of changes in equity, which is your stockholders' equity. So these are the four primary statements, which in a way provides stakeholders with a view that what are my assets, liabilities, income, expense, which I made during a particular period or as on date, right? That's the whole objective of putting together those financial information. When you look at the business performance of the company, the objective here is to help users or stakeholders understand that how exactly a company is managing their affairs, right? And when you think about a company, right, a company is not only doing a particular activity. Company is actually engaged into multiple business lines, so to say, at or about the same time. So let's say there's a company which is busy in selling goods, providing services, or in a way doing any other thing. For example, they sell in domestic market, they sell export, for example, and especially if there are conglomerates, right, they do a whole kind of things, right? So let's say one of the largest company in the country, right, they do oil refinery, they have oil extraction, and then they have telecom, and then they have retail, and then they have so many other stuff, right? So the whole idea is that how do you help users understand that how is this company is being run, right? How decisions are being taken in this company, right? How the decision maker in this company in a way decides about resource allocation. How do a key employees in a way or key managerial personnel gets evaluated in terms of the business performance. Which part of the business is doing good, which part of the business is doing not so good, etc., right? So that's the whole objective, is what the standard setters are looking to provide information to the users of the financial statement about the whole affairs of the company. So operating segment or IND AS 108 is actually a disclosure only standard. There is no measurement. This is not a measurement standard, or this is not a recognition standard, so to say. So this is not a transaction, which for which I'm doing accounting, recording, processing, etc. This is a disclosure only standard. So what does that mean? That I run my company in a particular way. Now the way, and I have, as part of my company, multiple types of businesses, or I deal with multiple types of customers, or I engage into operations into multiple types of geographies. And then I have set of people where I have assigned roles and responsibilities, set of decision makers who do decides this or decides that. And then I also in a way assess information, right, in a particular manner. So if I have all of that, that is where the whole objective is to provide information to the users of the financial statement, and that's what is operating segment is all about. So what we will do over next hour or so, we will try and understand all of this in great deal of detail, so that we able to in a way fully understand and appreciate what this thing is all about from that perspective, right? So that's the thing. So when you think about why do we need this standard, right? What's meant by operating segment? What is CODM, right? CODM stands for Chief Operating Decision Maker, right? And what is reportable segment? So operating segment is something which is where the discrete financial information is available. This is where the decisions are being made. This is where resource and performance reviews are, in a way, resource allocation and performance reviews are being done, etc. Reportable segment, a company may have multiple operating segments, right? And then you need to make an assessment whether those operating segment meets the aggregation criteria, right? And if they meet the aggregation criteria, then one or two or three or four operating segment may also get aggregated, and then they may called as reportable segment. Okay, so we will try and understand the basis of those aggregations and things like that, which is how to apply the aggregation criteria. What are the quantification thresholds? So there are certain minimum guidelines, so to say, that if you are doing reporting, if you are doing disclosures under segment reporting, this is what you need to cover at a minimum. How to disclose business information precisely to enable the stakeholders to have insights about the business operations, and what are the disclosure requirements with regard to operating segments. So it's only about disclose, and disclose, okay, with some quantification criteria. So it's not about the recognition or measurement of any other accounting transaction, but to make sure that whatever disclosures you are giving, from a segment information perspective, they cover minimum of revenues or assets or things like that, and we will try and understand that in great deal of detail. So before we jump on to that, let's just quickly look at my examination trend, right? So how this standard in a way is being looked at. So in the old syllabus, not examined, right? In the new syllabus, examined once, which was in May of 2018. So we will try and go through that question as well in degree of detail. So it's an interesting standard, right? It's an interesting standard, and again, this is a disclosure which is there in most of the company's financial statement. Though a lot of companies do take a view, is what we see, that I don't have a segment, right? I have only one segment. Okay, a lot of companies try to take a view that I only have one segment, but more often than not, companies which are better governed, companies in a way where there is a greater degree of accountability, responsibility, or high degree of governance, right? There we normally encounter that the reporting lines are defined very clearly, how business performance in a way is being assessed. The business segmentation is also defined, and that's where you will see a level of segment disclosures, right? So regulators are very, very particular about segment disclosures, so to say, that how do you communicate, as I said, about the performance of the company in a meaningful manner to all the stakeholders as it may be required. All right. Moving forward, in terms of the objective and scope of the standard. So objective of IND AS 108 is to ensure that the sufficient information should be disclosed to enable users of financial statement to understand the nature and financial effects of the business activity and economic environment in which the entity operates. Provide sufficient information used by the management to understand entity main business activity, where those activities are located, and how well those activities are performing. So that's the broad objective in a way, right? Look at to say that sufficient information, as I said, it's a disclosure only standard, right? Disclosure only standard. So essentially what does this mean is that the objective of these disclosures is to help users to understand about the way the company is being run, the way the company is being governed, the way the economic environment in which the company in a way operate. What are my main business activities? What are my risks of which in a way I am exposed to? All of that is what you try and communicate through your segment disclosures to your investors, right? So from a scope perspective, right, it's again applicable to all companies to which IND AS is notified under the Companies Act 2013 in a way apply, 2013 apply. And voluntary disclosure about segment cannot be termed as segment disclosure unless it complies with IND AS 108. So in a way, segment disclosures is mandatory for everyone. Whosoever is doing IND AS. Internationally, when you look at internationally, segment disclosures are only mandatory for listed companies under IFRS 8. We have the same standard, it's verbatim, there is no difference. But under IFRS 8, the segment disclosure is mandatory for public companies, listed companies, right? Whereas in India, we've decided to make it mandatory for all companies, whether you are a listed company or an unlisted company. If you have applicable segments, you will have to do segment disclosures. If you don't have segments, then you do something what is called enterprise-wide disclosures. In a way, you try to break down your revenues or business performance into certain logical groups. Which is what which was the old standard, right, on segment reporting under Indian GAAP, where you try and do by product or by services or by geography, right? Otherwise, the objective of, or the way the new standard looks at to say how do you do this under IND AS 108 is how you as management doing the review of your financial performance, right? So that's the biggest distinction between the old Indian GAAP and IND AS 108 is that the segment disclosures under IND AS 108 is that how do you as management look at your business performance? How is your MIS, which is Management Information System, is in a way being presented for optimal decision making, right? On what information you do your decision making, that information, if is in a way logically speaking, should be made available to your stakeholders. In a way, these are the information, this is how you evaluate performance in a way from that perspective. And as I said, this is a mandatory disclosure. So if a financial report contains both the consolidated financial statement of a parent that is within the scope of IND AS 108, as well as the parent separate financial statement, segment information is required only in the consolidated financial statement, right? So if you're preparing both, then segment information is only required. If it is part of the same annual report, so to say, then segment report is only required in the consolidated financial statement. Awesome. So steps to report operating segment, right? The first step is identify the CODM. Who is the CODM? CODM is the chief operating decision maker, is the kind of a individual or a committee, right, who decides, who's been entrusted with the responsibility to decides about the direction of the company, about the financial performance of the company, or taking decisions, right? The guy who's supposed to, the person, let me put it that way, the person, or it could be a committee as well. And we will go through some of the examples, right? How do you identify the CODM? Then you need to identify the operating segments. Once you have identified the CODM, then you have to identify the operating segment. How do you go about identification of operating segment? What are the criterias basis which a business unit in a way is going to qualify as an operating segment is what we will talk about. And then determine the reportable segment. So once you've identified the operating segment, which said that there could be an aggregation criteria, right? And then there are 5 conditions basis which you do these aggregations, and we will talk about that. And then you present the required information and also reconcile to primary statement. So in a way that, let's say, your sum total of your operating segment, and then you have your income statement, there could be an element of reconciliation between what you presented as operating segment and there your income statement. So you need to have a reconciliation line in a way to ensure that your MIS in a way reconciles to your overall financial performance as disclosed as part of your statement of profit and loss account. Okay, so 4 steps: identify the CODM, then determine your operating segment, and then determine your reportable segment, and then present the information and reconcile, right, to your primary statement. That's what we need to do as part of my segment reporting. So now I'm going to look at how do I identify the CODM. Okay, so let's talk about how do we identify the CODM. Who is the CODM? CODM is chief operating decision maker. Chief operating decision maker, right? Is the person who's been entrusted, or a committee entrusted with the roles and responsibility to take decision, to allocate resources, to do performance evaluation. The term chief operating decision maker identifies a function, right? Not necessarily a manager with a specific title. The function is to allocate resources, right? Allocate resources to assess the performance. Allocate resources to assess the performance of the operating segment of an entity. Often the CODM of an entity is its chief executive officer or chief operating officer, right? Either it's a CEO or COO. But for example, it may be a group of executive directors, right? Many times that we see that some of the decision making in a company is actually done by a committee of CEO, COO, or CFO all put together, or it may be a committee of the board in a way where the CEO reports to, and then the board in a way, committee of that board in a way takes decision. So you have to actually, this is the first step. So you have to actually go deep and ask some of the relevant questions about the company to understand, based on the fact pattern, who is what function in a way takes decision about allocating the resources to assess the performance, right? Now, often it is the CEO or the COO, but sometimes it can be a committee as well. So generally speaking, CODM is the highest level of management who is responsible, right? Who is responsible for making strategic decision about the entity's segment. So who's responsible about making strategic decision about the entity's segment. I mean, it's a very simple thing. You think about, let's say, your own family, right? Who takes decision in your family, right? There are various things which you do, right? Or you look at any business enterprise. So who takes decision in that business enterprise for decisions which matters, right? For decision which matters, right? So that's what you'll have to make an assessment, and then that person, that function is actually the CODM. Let's take few examples, right? So good group executive committee comprises of CEO, COO, and president. The committee usually assess the performance and accordingly makes resource allocation decisions. Each committee, the committee usually assess the performance and accordingly makes resource allocation decision. Each committee member has a single vote. Okay, each committee member has a single vote. However, the president can override a vote of the committee, right? So the president can override the vote of the committee. So the question here is, who is the CODM, right? Who is the CODM, right? Who is the CODM? All right, let's look at, I think we have another case. Assume the same facts as in case A, except that the supervisory board reviews the operations of the committee. In both cases, you are required to identify the CODM of good group. CODM is Chief Operating Decision Maker. Chief Operating Decision Maker, right? And I tried to explain this, that who is this? This is a function, the person, individual, or a committee is going to decide the direction of the company. The strategic decisions is what is going to take. So who is responsible here to take those strategic decisions, and who has the power to take those strategic decisions? Is it the committee or is it the person, right? And if you see here, in case A, it's very clear, right? The president can override the decision of the committee. So in a way, the president is the CODM. All right. Similarly, in case B also, it's the president who is the CODM, because supervisory board is not empowered in a way to override the decisions of the president. Of course, supervisory board can make recommendations or give guidance to the president, but it's the president neck is on the line, as we call it. In a way, the president is supposed to take decision in this fact pattern, and hence the president is the CODM. So in this case, the CODM is the president. This is on the basis that the president essentially controls the executive committee and therefore has control over the operating decisions that the executive committee makes. In case B, the answer doesn't change. The CODM remains the president because the mere existence of the higher level supervisory board does not necessarily mean that it is the CODM. That supervisory board is to provide guidance or recommendation, but the decision making stays with the president, right? That has not changed. So in practice, this will be sometimes, there will be a matter of judgment depending upon the specific facts and circumstances, right? So as you know, IND AS is a principle-based standard, and there often you will come across matters which require you to exercise judgment, and that's where one has to be cautious, and you exercise judgment, and then you do appropriate disclosures. Look, these are the fact patterns which I interested upon and I evaluated, and that's how we ended up taking a judgment call or a decision, right? From that perspective. Okay, so identify the operating segment. So we have identified the CODM. We've understood the principles of identification of the CODM. Now we move to step 2, right, which is identify the operating segment. Okay, so how do I identify the operating segment? An operating segment is a component of an entity, is a portion of an entity that engages in business activity from which it may earn revenues and incur expenses. So it's like a business line of business where I earn revenues, right, and incur expenses, right, including revenues and expenses relating to transaction with other parts of the business. So there could be, right, there is a business line A, but that business line A is supported by business line B, and that business line B is nothing but only supports business line A, right? So in a process manufacturing, right, there could be individual processes can also be identified as a line of business. It's possible. It's only depend upon how you're running your business, right, and whether those subcomponent are actually a part of a larger business. Subcomponent can be sold individually in the marketplace, so on and so forth, right? So and then the other second condition, right? The first condition was that it's a component which has a business activity which results into earning revenue and incurring cost, right? That's condition number 1. The second condition is that the component whose operating results are reviewed by the CODM to make decisions about resources to be allocated to the segment and assess its performance. Again, resource allocation and performance evaluation. How do you do resource allocation and performance evaluation? If you have information available about that business, right? And if the information is available, but who is supposed to review that information is the CODM. If the CODM is not looking at that, that information is not relevant because that's not strategic, right? So the CODM has to be provided with that information. That person or committee or the function has to review and then take decision about resource allocation and performance review. All right. And the third criteria is that the discrete financial information is available. So how will you make the decision? You need to have the discrete financial information. Okay. Discrete. So there are 3 things which you need to look at from the perspective of identification of an operating segment. Has to be a component of the business, right, which is earning revenues and incurring cost. That component operations are supposed to be reviewed by the chief operating decision maker for allocating resources and assessing performance. And how will you do it? You need to have discrete financial information. That means that it's like an independent P&L of that component or that business unit needs to be available for it to qualify as an operating segment from that perspective. An operating segment may engage in business activities for which it has yet to earn revenues. For example, startup operations may be operating segment before earning revenue. So it's possible that something qualifies as operating segment and you may not have revenues. That's not a common situation, but it is possible. possible. Awesome. So operating segment, three things. It has to be a component which is earning revenues, incurring cost. The component business performance is to be reviewed by the CODM for allocating resources and performance evaluation, and the discrete financial information is available for that component of the business. Okay. So how do we identify? Is the component able to earn revenues? Yes. Are the component results reviewed regularly by the CODM? Yes. Is discrete financial information is available for the component available? Yes. Then it is an operating segment. The answer to that is no. Then it is not an operating segment, but of course we discussed in exceptions like startup operations. Okay, otherwise this decision tree generally works, right? This decision tree generally works. So let's take an example. Okay, Red Limited is a manufacturer and seller of cosmetic products, food and grocery products. Okay, so cosmetic and then food and groceries. And product X, Y, and Z are three products that are mainly manufactured by Red Limited. So there are three products, X, Y, and Z are three products that are made by Red Limited. Now, product X is classified as cosmetic product, and product Y and Z are classified as food and grocery products, similar products. They are similar types. Now, discrete financial information are available for each manufacturing locations and for the selling activity of each product. There are two line managers responsible for manufacturing activities of products X, Y, and Z. Discrete financial information are available for each manufacturing locations and for the selling activity of each product. Okay, awesome. So we have the discrete financial information is also available. There are two line managers responsible for manufacturing activity of product X, Y, and Z. Manager A1 manages product X and manager B1 manages product Y and Z. The operating results of cosmetic products and food and grocery products are regularly reviewed by the CODM. Okay, awesome. You are required to identify the operating segments of Red Limited. So what are my operating segments here? So I have to look at, is there a component which is earning revenue, incurring cost, right? And then the results of that component are reviewed regularly by the CODM. Why? For allocate resources and performance reviews, right? And the discrete financial information is also available. If you meet all of three, it is an operating segment. So when you look at here at what level it's met, it's at product X as one component and then Y and Z as another component, right? So these are two operating segment possibly is what we have here. Let's look at the solution. A component of entity is considered an operating segment if it satisfies the below mentioned criteria. It engages in business activity, earn revenues, and incur expenses. Fantastic. Results are regularly reviewed by the chief operating decision maker to make decisions about resources to be allocated to the segment and assess its performance or performance evaluation. And the discrete financial information is available, right? In this situation, cosmetic, food and grocery product line meets the criteria for operating segment set out above. Therefore, Red Limited operating segment may be cosmetics and food and grocery. So there are two segments, right? Two operating segments, which is cosmetic and food and grocery segment. Awesome. Let's look at another example. Yellow Limited is in the business of manufacture and sale of two distinct type of product, X1 and Y1. X1 and Y1. Yellow Limited supplies the product in domestic market within India as well as export to European market. Okay, Yellow Limited supplies the product in domestic market. Okay, within India, domestic market within India, as well as export to European market. Okay, there are two types of product, X1 and Y1, and I'm doing domestic and I'm doing European, which is export as well. There are two regional managers responsible for manufacturing activity of product X1 and Y1 worldwide, and also two other managers responsible for different geographical areas. Two managers responsible for manufacturing and two managers responsible for different geographical areas. Now, Yellow Limited provide information product wise, which is X1 and Y1, right? And as per the geographical location of the company, which is domestic and export, right? For internal reporting purpose, the CODM regularly reviews the operating results of both sets of components. So I am not only looking at X and Y, I'm also looking at domestic and export. So, and there are two people here, there are two people here, and the CODM is sitting on top of this everyone, right? And doing the review, right? Good. You are required to identify how should Yellow Limited identify its operating segment. Good question. Good question, right? So in a way, it's like a matrix type of an organization, okay, where you have product lines, you have sales lines, and then you have business managers, you have information available, and you do reviews at all levels, right? In terms of for allocating resources and performance evaluation. So let's look at how you go about the evaluation, right? In this case, both the geographical sales area and product areas may meet the criteria for operating segment. However, in such situation, it is more difficult to determine clearly which set of components should be identified as the entity's operating segment. In such situation, the entity should determine which set of segments, components constitute the operating segment by reference to its core principle. The core principle is that entity should disclose information to enable users of its financial statement to evaluate the nature and financial effect of the business activity in which it engages and the economic environment. So that's the objective. Remember the objective of the standard, right? Is that you got to provide information to the users. So you should be able to assess whether it's an element of judgment which is coming in here, would realistically represent the level at which CODM is assessing performance and allocating resources. Therefore, Yellow Limited should consider all the above factors and apply judgment to determine which component should be disclosed as operating segment, or you may decide to disclose all, you may decide to disclose both, right? That's also is possible. You may decide to disclose your segment as your in a way product wise, and then as per your geographic wise, if those informations are available, and that's what is in a being looked at by the CODM, reconcile those to your main P&L, all of that is in a way possible from that perspective. All right. Okay, so that's what, so we talked about step number one, which is to identify your identify the CODM, and we saw how do you identify the CODM is to look at the function which in a way takes decision about the resource allocation and performance evaluation, and that function can be CEO or a COO, or could be a committee, or could be one person in a way which is going to take those decisions. I think that is what is very, very important. And then we saw how do we identify the operating segment, and we said that there are multiple things which you need to look at from a decision tree perspective, that Is there a component of a business for which the revenues and expenses are in a way being incurred, revenues are being earned and expenses are being incurred? Is that the information is being reviewed by the CODM for allocating resources and for performance evaluation? And is the discrete financial information is available for in a way that component of the business? If the answer to that is yes, then it meets the definition of an operating segment. And in some situation, we said there could be an element of judgment, and you got to exercise that judgment and, of course, disclose appropriately. And now we're going to talk about reportable segment, right? So you have the CODM, you have the operating segment, and now we need to determine the reportable segment. That means now we need to get into the aggregation criteria. Now we need to learn about the quantification requirements in the standard, and all of that is what we will try and understand and absorb, as part of the requirement of this standard. Okay. So what's the reportable segment? An entity should report separately information about each operating segment, that has been identified or results from aggregating two or more of those segments and exceeds the quantitative thresholds, right? Operating segments that do not meet any of the quantitative thresholds may be considered reportable, okay, and separately disclosed if management believes that information about the segment would be useful to users of the financial statement. That means it's again an area of judgment. It's an area of judgment that if it is not of such size of the overall business, but you still want to disclose, you should only disclose if you believe that this is going to help, right, the users of the financial statements in a way from that perspective. So what are our quantitative thresholds? So we have revenues and profit or loss, or assets, right? These are the three criterias one needs to look at. And when you say revenues, which is 10% of revenue, internal or external, for all segments. So you look at total revenues of that business, right? And if a component exceeds 10% of revenues, then it becomes an operating segment or a reportable segment from that perspective, subject to, again, the aggregation criteria. And we will again learn about the aggregation criteria. So if the revenue exceeds 10% of the total revenues, right, you need to look at that. And then the profit or loss, 10% of absolute combined profit or combined loss, whichever is greater. Okay, 10% of absolute combined profit or combined loss, whichever is greater, or 10% of combined assets for all operating segments. So 10% is the criteria, right? 10% is the criteria for revenues, for profits, or for assets, right? And you look at the absolute numbers from that perspective, and you get to up to reportable segment up to 75%. So these are two levels of threshold. Okay, 10% of revenues, internal, external put together, 10% of profit, absolute profit, or 10% of absolute loss. And the third element is 10% of combined assets. Okay, 10% of combined assets for all operating segments. Okay, 10% of combined assets for all operating segment. Reportable segment, but external revenue of reportable segment must be more than 75% of total external revenue. We'll do this with the help of an example. I'll just take a pause. All right. So now we will go through the example. Okay, we are all set. Purple Limited has identified the following business components. So we've understood the CODM, we've understood the operating segments, you understood the quantification thresholds, right, which is revenue, assets, and profit or loss. And you also understood 10%, 10%, 10%. And then we also understood an aggregate 75% or more is what we need to cover. And then we also said if anything is less than 10%, right, And as management, you still want to give because you believe that it is relevant for the users. You please give, right? There's no restriction, but it just pauses and want to ask you a question. Okay. And if you've covered 75% more, I think you're good. I think that's what broadly the disclosure expectations are under the standard. So Purple Limited has identified the following business component: chemical. So there are external revenues, there are internal revenues, there's a profit and assets, right? All kind of information is available here. So then you have, so there are like 4 business segments, so to say, or there are 4 ways the information is in a way being captured: chemical, processed food, bakery, and others. And the total is 194 is my revenues, and 0 revenues for processed food. Bakery 6 lakh, other 16 lakh, total is 216 lakh, 90 lakh is my internal revenue, 60 lakh is my profit, and my assets are 180 lakhs, right? All the information is given here. Okay, what else? You are required to identify which of the segments, you are required to identify which of the segments would be reportable as per the criteria prescribed in IND AS 108. So what do we need to do? We need to get to 10% and we need to get to 75%. Okay. So 10% of revenues, assets, or profit or loss. So we need to first do that math. So 216 lakhs internal external revenues put together, how much is it is more than 300 lakhs, right? So we will just do the quick math, and then we will look at the profits, which is 60 lakhs. 10% of that is 6 lakhs, and we look at assets. 10% of that is 18 lakhs. Okay, so let's just try and understand. Okay, so quantitative thresholds are calculated as below. Percentage segment sales to total sales. Okay, for chemicals it is 63.4%, for processed foods it is 2.6, for bakery it is 1.96, and others is 32, so gets to 100. Similarly for profits, and similarly for asset. That's the way we put together a table of information. So in the previous slide, in the previous question or the slide, we had the question which provided us the quantitative information, and the quantitative information we've now put together in the percentage forms, right? When we look at total sales, internal, external put together, and then we looked at the profits and we looked at the assets, right? All of that is what we looked at. Chemical segment, now which all will qualify for segment reporting, right? So chemical would separately reportable since it meets all 3 sizes, right? Although any one criteria is required. So here you meet all 3. Processed food segment does not satisfy the revenue and profit test, but it satisfies the asset test. Okay, so this is also is going to be separately reportable, and bakery doesn't meet any. So now you're going to look at that it may not be classified as a reportable segment. Okay, so now when we cover chemical and process, right, whether we cover 75% of my revenues, so total external revenue of reportable segment, which is chemical and processed food, is 89.9%, right? 194 lakhs divided by 216 lakhs, which is 89.9% of total external revenue, which exceeds 75%. Hence, this condition is also satisfied, right? So then essentially we are saying there are two segments, reportable segments in this case, based on the fact pattern as provided to us. Okay, we'll just quickly go back to the quantitative threshold guidance which we saw, just to rephrase, right? Reportable segment, but external revenue, right? External revenue of reportable segment must be more than 75% of total external revenue. Okay, and 10%, 10%, 10%. And then we saw, so that's the question we had, right? And when you look at the revenue here, external revenue and internal revenue, right? 194 lakh, there's zero internal revenue here, zero external. 194 divided by 216, it is more than 75%, right? And hence, if we cover this, so we meet both the criteria. All right. So let's now talk about the aggregation criteria to determine the reportable segment. Okay, so we have understood the CODM, we've understood the operating segment, we've understood the quantification thresholds, and we now going to understand the aggregation criteria. Okay, aggregation criteria is an entity may combine information about operating segments that do not meet the quantitative thresholds with information about other operating segments that do not meet the quantitative threshold to produce a reportable segment. You can combine and produce a reportable segment only if the operating segments have similar economic characteristics and share a majority of the aggregation criteria. Okay, and share a majority of the aggregation criteria. All right, and we will talk about those aggregations criterias. So if an operating segment is identified as a reportable segment in the current period, in accordance with the quantitative threshold, segment data for a prior period presented for comparative purpose should be restated to reflect the newly reportable segment as a separate segment, even if that segment did not satisfy the criteria for reportability in the prior. That means what is this essentially saying? Previous year numbers are required to be presented in same format. Okay, even though in the previous year they may not meet the quantification criteria, right? However, if the information, of course, is not available, then you need to make that disclosure, right? That the information is not available because the MIS was not being prepared, the information was not there. Then you don't need to create the information. The objective here of segment reporting is that the information should be readily available, right? Because that's how that information was, basis which the CODM was reviewing the information, basis which the CODM was doing the performance evaluation and resource allocation, right? So how do you look at steps to aggregation, right? Consistent with the core principles, similar economic characteristics, right? And then similar in each of the following. What are those areas? Nature of products or services. Similar in each of the following, okay? Nature of products or services, nature of production process, the distribution method, the type of customers, and the regulatory environment. It's important. The 5 criteria you need to look at, okay? A similar economic characteristics. How is that being defined? Nature of the product and services, nature of the production process, the distribution method, the type of the customers, and the regulatory environment. If you meet yes, maybe aggregate, right? And it meets the aggregation criteria if you all such 5 conditions in a way are met. Similar in each of the following, which is nature of product or services, nature of production process, distribution method, type of customers, and regulatory environment. Now, so there are 2 things, right? So if it exceeds 10% of the reporting thresholds, right, those assets or revenues or profit or loss, right, then you can aggregate those segments into 2 or more such segment into a reportable segment if all these criteria are met, right? Now, if you are not meeting those the 10% thresholds, okay, and you're lower than 10%, there are multiple such chota small segments, right? Then you can aggregate them and present them as one reportable segment. All right, if the majority of the criteria is being met. So this is a distinction, right? The distinction is if it exceeds the 10% quantitative guidance, then you need to meet all to aggregate. Okay, if you don't exceed the 10% guidance, that means you're below the 10% guidance and you want to aggregate, you can only aggregate if it meets the majority of these, which is nature of the production process, nature of the products and services, the type of customer, the regulatory environment, and the distribution method. These are the 5 criteria. Okay. And why do companies want to aggregate? The reason the companies want to aggregate, because they don't want to disclose everything to the external world. Okay. So they want to aggregate, right? But you got to make sure that the aggregation anyway meets the requirement of the standard. That's the important thing. Let's try and follow this with the help of an example. So White Limited is engaged in the business of manufacturing and selling stainless steel products. Okay. White Limited is engaged in the business of manufacturing and selling stainless steel products. The varieties of products like tableware and cutlery, the cookware, the kitchen sinks, the kitchen equipments are manufactured and sold by White Limited. You are required to determine how should White Limited classify these stainless steel products into different segments. Okay. So you're doing the manufacturing and selling, and then there are multiple things which you're doing. So, required to determine how we should present this into different segments, right? So 2 or more operating segments may be aggregated into a single operating segment if the segment has similar economic characteristics and the segments are similar with respect to various factors like the nature of the product in the production process, the type of customer, method of distribution, and the regulatory environment. Now, so far as the varieties of stainless steel products are concerned, all factors such as the product, the production process, the type of customer, the method of distribution, and are common. So there is no need to create different segment for each type of product. Awesome. All right, pretty simple. So in a way, it meets the aggregation criteria. Now we're going to quickly summarize what we've talked about. Identify the operating segment, right? How do you identify the operating segment? You look at whether this component has revenues and expenses, whether the results are reviewed by the CODM to allocate resources and performance evaluation, and whether the discrete financial informations are available. And you also have an exception we talked about, like in startup operations where you may not have revenues and only expenses, but those results are reviewed and it has the potential to generate revenues, and revenues can be internal or external, right? Now you got to aggregate the operating segment. When do you aggregate operating segment? When they have similar economic characteristics. And how do you define similar economic characteristics? Is depending upon the nature of the product or services, the nature of the production process, the distribution methods, the type of the customers, and the regulatory environment in which you operate, right? So all of that is what you look at. And then we talked about that if it is more than those quantitative threshold, all conditions have to be met. If they are less than quantitative thresholds, then majority conditions have to be met for aggregation. Then you determine the quantitative thresholds. A segment is reportable if it exceeds what? 10% of revenues, assets, or profit or loss. Okay. And then you look at the combined threshold of 75% of external revenues in a way from that perspective. So that's what is what we talked about. We of course also talked about how do you identify an operating segment, how do you identify the CODM, right? How do you identify the CODM as well? And the CODM is the chief operating decision maker. All right. Okay, let's take this example. It's pretty lengthy example, which is a case study from May 2018 for 10 marks, right? 10 marks. Okay, very, very important. Let's go through this. So, but you have to practice and practice, right? It's important for you to practice to get this right for the purpose of examination. Seeds Limited is operating in oil industry. Its business segment comprises crushing and refining. Okay. Certain information for financial year 2017-18 is given below. Okay. I have external sale for crushing and refining. External sale of 100,000 and 35,000. Okay. Tax 2,500 and 1,500. Other operating income 20,000, 7,500. Result 5,000, 2,000. Okay. Assets 25,000, 15,000. Liabilities 15,000, 5,000. Liabilities are not a criteria, right? Additional information. Unallocated revenues, net of expenses is INR 1,500. Interest and bank charges is INR 1,000. Income tax expense is INR 1,000. Investment INR 5,000 and unallocated assets is INR 5,000. Unallocated liabilities, reserves and surplus, and share capital are INR 10,000, 15,000, and 5,000. All right. Depreciation amount for crushing and refining are INR 500 and 150. Capital expenditure are INR 2,500 and 1,000. Revenues from outside India is 15,000 and 5,000. Now, based on the above information, how Seeds Limited would disclose information about reportable segment revenues, profit or loss, assets and liabilities for financial year 2017-2018. So what all I need to disclose? I need to disclose the revenues, profit or loss, assets, and liabilities for crushing and refining. Right? These are my two segments. Okay. So we don't have to evaluate who's the CODM. We don't have to evaluate what are my segments, right? We simply have to look at how do the information which is given here needs to be presented, right, to the users of the financial statement. So essentially we have to draw up two separate P&Ls, do the reconciling items, and get to the overall P&L of the company, right? So let's look at how do we go about this presentation. So we're going to look at revenues, external sales gross, which is 100,000 and 35,000. Then we said tax, 2,500, 1,500. So reduced external sales net is 97,000, 131,000. Other operating income, we've got this. So now we have total revenues of this much. Simple, that information has been given to us. So we get to the total revenues, right, including other operating income. This include other operating income. Okay, 117,500, 41,000, total is 158,500. Then my segment results, which is 5,000 and 2,000, is unallocated income is 1,500. Now, profit before operations, before interest, taxation, and exceptional item is 8,500. All right. And then we've got other stuff, right, which is interest and bank charges, then exceptional item, 0, then profit before tax, and we've got taxes, and then 6,500, right? So that's how I've got to my entire P&L, which is 6,500. So a lot of information which is not to be allocated gets into the total item in a way, right? And then you have segment assets and you have investments, unallocated assets. So my total asset is 50,000, and then I have segment liabilities, right, which is another 15,000, which is 20,000 unallocated liabilities. Then I have share capital, reserves and surplus. I've got total liabilities. So essentially you are driving segments to get to your overall P&L and overall balance sheet. And again, I would encourage you to look at a lot of disclosures made by a lot of companies as part of their financial statement. Pick up the annual reports of large companies. Just look at how all of this in a way is being reconciled. And of course, there's a lot of examples available in study material, and also is what we're going to share with you. Then there's some other information, which is capital non-cash and capital expenditure information also you got to provide. That also is in a way being captured here, right, from that perspective. And then you provide the the information, right? So I think that's what you look at, and then you provide the geographical information, okay, which is the breakup of revenues, India and outside India, and then segment assets, India, outside India, okay. All of that is identifiable to each of the segments, okay. That's how we provide information, right? India, outside India, and total. So you do the segment, and then what is called is the enterprise-wide disclosure. So that also is in a way is required. So enterprise-wide disclosure, you do it again then based on geography. So here it is you've done based on geography, okay, based on whatever the information was given to you. Awesome. All right. So now we're going to talk about the presentation and disclosures. As I said, it is a disclosure only standard. So disclose, continue to disclose, but make evaluations, right? So you disclose the following. So what all goes into for which a statement of profit or loss is presented, the general information about reported segment profit or loss, including specified revenue and expenses included in the reported statement, segment profit or loss, segment assets, segment liabilities, all of that, right? And based on measurement, reconciliation, right? Which is what we were saying, that you got segment revenues, segment expenses, segment results, segment expenses are not required, so revenues, and then straight away jump to results, and then your assets and your liabilities, and then reconciliation, your total, right? Total of segment revenues to reported segment profit or loss, segment assets, segment liabilities, and other material segment items to corresponding entity amount, which is your broad P&L and balance sheet. So reconciliation of the amount in the balance sheet for reportable segment to the amount in the entity balance sheet are required for each date at which a balance sheet is presented. You should disclose additional information used to identify how you identified, right? Again, making reference to the CODM, making reference to the discrete financial information, and looking at the aggregation criterias. So all of that is what you do. The judgment made by the management in applying the aggregation criteria, brief description of the operating segment that have been aggregated in this way, economic indicators that have been assessed in determining that the aggregated operating segment share similar economic characteristics and type of product and services from which each reportable segment derives its revenues, okay? Each reportable segment derives its revenues. Information about profit or loss, assets or liabilities. So following again shall be reported if these are provided to CODM, even if not included in profit or loss, revenues from external customers, internal customers, right? With other operating segments, interest revenues, interest expense, depreciation, all of that is, if these information are provided to CODM, right? We need to disclose. Material item of income and expenses are disclosed. The entity interest in profit and loss of the associates and joint venture, right? That can also qualify as segment in a way. From that perspective, they also qualify as segment. So you got to assess this. And then more information, right? Which we need to provide. So shall be provided income tax expense, okay, material non-cash item other than depreciation and amortization, investments in associate and joint venture, the amount of additions to non-current assets other than the financial instrument, deferred tax. So lots and lots of disclosure, right? Is what is required as part of this, and then you got to reconcile. So following reconciliation, so total of the reportable segment revenues to the entity's revenue. So let's say you've done internal, external, and then in the reconciliation, you eliminate intercompany or inter-segment revenue, so to say, right? And then total of the reportable segment measure of profit or loss to the entity profit or loss, assets to the entity assets, liabilities to the entity total liabilities, for the total of the reportable segment amount for every other material item of information disclosed to the corresponding amount for the entity. From that perspective, all material reconciling items should be separately identified and described, okay, and also required to be shown for every other material item of information. Non-material segment cannot be clubbed with a reportable segment if aggregation criteria are not met. So non-material cannot be clubbed with material, right? I said you can only club if if it is already meeting the materiality criteria, which is defined as 10%. So you need to meet them all, right? If you're trying to club two non-material less than 10%, then you can club if you meet majority of the aggregation criteria. What were those aggregation criteria? The nature of product and services, right? The production process, the customers, the distribution, and the regulatory environment, right? If it changes the structure of the internal reorganization, right, as your reportable segment in a way changes, so you need to also present for earlier period, including interim period should be restated unless the information is not available, and the cost to develop it be excessive. The determination of whether the information is not available and the cost to develop would be excessive should be made for each individual item. I think it's an area of judgment and you've got to exercise it carefully. If you've changed the structure of internal organization in a manner that causes the component composition of its reportable segment to change, and if segment information for earlier period, including interim period, is not restated to reflect the change, the entity should disclose in the year in which the change occurs segment information for the current period on both the old basis and the new basis of segmentation, unless the necessary information is not available. And so I think so how these rules operate. So if you've changed, the idea is that the previous year information should be consistent with the current year. Now, if that is not available, okay, if let's say that is not available, then whatever you were doing in the previous year, you continue in the current year and provide the new information as well. So that when you go to the next year, you have the current structure and then the next year information, so that there is a comparative data sets are made available to the users of the financial statements. So that's the whole objective, right? Unless you believe that the information is not available. So that's one level of disclosures we make. And then we are required to make what is called as entity-wide disclosure, which is what you saw, which is that geographical presentation, right? Those are called entity-wide disclosures. So it could be product or services, it could be geographical area, right? All of that is what you try and cover. Revenue from external customers for each product or services or each group of similar product and services based on measurement basis for financial statements. So we need to do, or for geographical areas from external customers, non-current assets other than financial instrument, deferred tax asset, post-employment benefit, and rights arising under insurance contract is what is required to be disclosed. You also need to provide information for major customer if they exceed the individual customers, right? If revenues from a transaction with a single customer amount to 10% or more of an entity revenues, the entity should disclose that fact, the total amount of revenues from each such customer, and the identity of the segment or segment report. You don't have to disclose the name of the customer, all right? But you need to then disclose the total amount of revenues where you are dependent upon large customers, right? So why, again, this is a high risk for the business, right? If you are dependent on one customer and that customer goes away, your business is like you got to reinvent. So as user, I need to know what is your spread of your revenue, spread of your assets, spreads of your operations, so to say. Are you dependent upon one customer or are you okay, right? You got a bunch of other customers as well. So that is again a 10% threshold. Okay, so this 10% is very important, right? And 75%, right? Now 10% was looked at for both internal and external combined, whereas 75% was only in the context of the external revenues. Okay, and we talked about the aggregation criteria, the reportable segment, entity-wide disclosures, all of that. The key for you is to practice, right? Look at number of these disclosures look at the fact pattern, but the principles are identify the CODM, determine your operating segment, then look at your reportable segment, and then do your, in a way, necessary disclosures as what is required along with your entity-wide disclosures. Extracts from financial statements of Dabur India Limited. This is just for your reference here. So they have defined as their segments as consumer care business and food business and retail business and other segments, which are like gum, pharma, and others. Then they've said, how have they gone about identification of segment? The CODM maker monitors the operating results of the business segment periodically, right, for the purpose of making decision about resource allocation, right, about resource allocation and performance assessment. So that's the statement you have to make. Segment performance is evaluated based on profit and loss of the segment and is measured consistently with the profit and loss, right, in the financial statement. Then you're disclosing the segment revenues and results, which are not direct, the expenses and income, which are not directly attributable to any business segment, are shown as unallocable, right? Unallocable. Similarly, you have to disclose segments assets and liabilities, which are your property, plant and equipment, your trade receivables, your cash and cash equivalent, all of that, right? Then you have segment liabilities, which are your trade payables, other liabilities. Then there are common assets, which are called unallocable assets and liabilities. The principles, the measurement principles are consistent with the measurement principles you followed for financial statements. There are no inter-segment transfers in their case, right? And then you have to look at all segments. These are my 4 segments, and then I have unallocated stuff, and then this is how you reconcile to your revenue from operations. It's a comparative period information in a way is being given. Then you get to the segment results, right? Then you get to segment total. Then you have finance cost, unallocated expenditure, then you profit from joint venture, share of joint venture, exceptional items, and PBT, your tax expense, your net profit for the year. And now we're also going to look at, of course, your segment assets, then you disclose about your segment assets, you disclose about segment liabilities, then there are unallocated. Here also there is some unallocated, which are your corporate assets and all of that. Here also you have unallocated liabilities, right? So then you also going to look at capital expenditure, right? You also look at the depreciation and amortization. You look at the non-cash. Then they made this statement, right, that you are not reliant on revenues from transaction with any other single customer, right? No dependence on any other single customers, and possibly they haven't made any, because they're largely, let's say, all domestic business is what they have. That is why they have not made those entity-wide disclosures in a way from that perspective. Okay, so now we're going to quickly talk about the difference between IND AS and Indian GAAP. So what are those differences? Okay, so IND AS is IND AS 108, and we have Indian GAAP AS 17. So when you look at the determination of segments are identified based on the financial information regularly reviewed by the CODM. Here we don't have the CODM concept under Indian GAAP, right? Under AS 17. So here identify 2 types of segment, business and geography, using a risk and reward approach, right? Business and geography using a risk and reward approach, which is what we look at products or services, or you look at your geographical area. Same measurement basis as used by CODM, reconcile. Here it is measurement basis is in conformity with financial statement. Okay, so there could be again differences. Ordinarily under A17 you shouldn't have any reconciliation to your financial statement. Here you can have the reconciling item. Segment revenue, segment expenses, assets and liabilities are not defined. Here it is have been defined, but largely you get to the common answer. There are aggregation criteria, right, which are defined under IND AS 108. There are no aggregation such criteria or the guidance under AS 17. Entity-wide disclosures, again, is required based on product and services or geographical area. About major customers are required, apply to entities having a single reportable segment, okay? And this would equally apply to entities having a single reportable segment. And here, based on classification of segment as primary or secondary. So you do primary, and then your secondary is like additional set of information which you need to provide. So that's the broader distinction between Indian GAAP and IND AS. I would say in practice, the biggest difference is IND AS 108 suggests that what is it the CODM looks at is what you're supposed to disclose, right? Subject to the aggregation criteria and all. Whereas AS17 suggests that you look at the product or services or geographical, look at the risk and reward, and then make some basis on which you need to disclose using the measurement as what you use for your financial reporting, right? So that's where the big distinctions are. Some more questions, right? Blue Limited has identified 4 operating segments for which revenue data is given below. External, internal, and total sales, 600,000, 130,000, 170 plus 20,000, and then so total is 20 lakhs, right? And that's what it is. So they have additional information. Segment 3 is a new business unit, and management expect this segment to make a significant contribution to external revenue in coming year. Remember, even if it is less than 10%, but you as management want to disclose, you're free to disclose, right? If you believe this is going to be relevant from a user, and that's the information suggests, right? You are required to determine which of the segment would be reportable under the criteria defined in IND AS 108. So what are the criteria? 10%, right? So what is my total revenues is 20 lakhs, okay? And then what are these percentages? 6 lakh of 20 lakhs, 1,30,000 of 20 lakhs, 1,90,000 of 20 lakhs, and 10,80,000 of 20 lakhs. So I'm going to look at each of these percentages, right? And then I'm going to look at 75%, okay? And then I'm going to determine that what is my reportable segment, okay? So threshold amount is 10%, is 2 lakh. Segment 1 exceeds the threshold. Segment 2 and 3 do not meet the threshold. Segment 4 exceeds the threshold. However, the total external revenue generated by these two segments, 1 and 4, represent only 70%, okay? 7 lakh by 10 lakh of the entity total revenue. If the total external revenue reported by operating segment constitute less than 75%, additional operating segment should be identified, right? To get to 75%. In case Blue Limited, it is given that segment 3 is a new business unit and management expect this segment to make a significant contribution to external revenues. So Blue Limited designate this segment also as a reportable segment, making the total reportable segment is 87% of the total entity revenue. So that's how you get to your disclosures. Thank you very much. With this, we've come to an end on segment reporting. So again, I would strongly recommend you to look at number of disclosures made by a lot of companies' financial statement, pick up number of annual reports, just go through this disclosure. So this will help you fully appreciate how all of this is being done in real life as well. Thank you very much.